Mayong adlaw, I am Ryan Carbonilla and I am here to discuss about financial institutions and intermediaries. Let's go! A financial institution is an organization engaged in managing money through transactions such as deposits, loans, investments, and currency exchange. These institutions act as intermediaries connecting savers with borrowers and facilitating economic growth. Financial institutions not only keep money safe but also help finance projects and support business expansion. There are two main channels of financial institutions: financial market and banks or other financial intermediaries. Financial markets are values when stocks, bonds, and other securities are traded to help businesses raise capital. The stock exchange is an example of a financial market where investors buy and sell shares. Banks and financial intermediaries accept deposits from individuals or organizations and lend them out as loans. A financial intermediary serves as a middleman between depositors, savers, and borrowers, businesses needing capital. There are three basic structures of financial institutions: depository institutions, contractual savings institutions, and investment intermediaries. Lastly, depository institutions earn income from loan repayment, while investment intermediaries focus on pooling funds for diversification and higher return rather than accepting deposits. That's it. Thank you for listening. See you next time. Bye.
Hello everyone, here's my topic from Unit 4 in Financial Institutions and Intermediaries, Chapter 13, titled The Basics of Commercial Banking. So first, what is commercial banking? Commercial banking refers to the part of the financial system where banks provide financial services to individuals, businesses, and organizations. These banks accept deposits, provides loan, and other financial products like checking accounts, saving accounts, and credit facilities. Their main goal is to earn profit through interest and fees while helping circulate money in the economy. In short, commercial banks act as intermediaries between people who have money to save and to those who need money to borrow. So at this juncture, I will give you the 10 facts about the commercial banking. Number 1. Financial intermediaries. Commercial banks connect depositors who have surplus funds with borrowers who need funds. 2. Deposit services. They offer different types of deposits, accounts such as savings, current, and time deposits. Third is the loan services. Banks lend money to provide individuals, businesses, and governments for various purposes. Number 4, profit source. The main income of commercial banks comes from the interest charged on loans and service fees. Fifth, credit creation. Banks create credit by serving a portion of the deposits they receive, which increases the money supply in the economy. 6 is the regulation. Commercial banks are supervised by the central banks to ensure safety, solvency, and fairness in operations. 7. Liquidity requirement. They must keep enough liquid assets to meet customers' withdrawal demands. 8. The payment system role. Banks help in payments and funds transferred through checks, ATMs, online banking, and electronic systems. 9 is the risk management. Banks handle different risks such as credit risk, liquidity risk, and market risk to maintain stability. Then lastly is the economic important. Number 10. They support economic growth by mobilizing savings, financing businesses, and promoting trades and investments. So that would be all for my report about the basics of commercial banking. To sum it up, commercial banks are very important in our economy because they help manage money by accepting deposits, giving loans, and supporting both individuals and businesses. They act as the link between people who save and those who borrow. I hope you learned something and understood how commercial banks works as financial intermediaries. Thank you for listening.
Good day, everyone. So let's proceed to the next topic about expanding the boundaries of banking. So what is expanding the boundaries of banking? It means using technology and innovations to make banking more accessible, efficient, and inclusive beyond traditional methods and locations. So here are the 10 facts about expanding the boundaries of banking. First, digital banking enables 24/7 access to financial services worldwide. Secondly, mobile apps let customers manage money without visiting a branch. Third, fintech partnerships drive innovations and faster services delivery. Fourth, open banking allows secure data sharing between financial institutions. Next, blockchain technology increases transparency and reduces fraud. 6. AI and machine learning personalize customers' experiences and detect risk. 7. Cloud computing improves scalability and reduces IT costs. 8. Financial inclusions growth by reaching unbanked and underbanked populations. 9. New banks offer digital-only services with lower fees. 10. Cross-border banking expands with fosters cheaper international payments. So that's already 10 facts about expanding the boundaries of banking.
Hey everyone, let's talk about something that keeps our economy alive. The Philippine banking industry. You may think banks are just where we keep our money. But did you know that they're actually one of the biggest forces driving our country's growth? And now, I will be going to discuss about the 10 facts of the Philippine banking industry. Let's start with, did you know that our banking system is stronger than ever? Even through global challenges, it stayed solid, expanded its assets, and kept the economy moving forward. That's financial resilience in action. Did you know that banks are the engine of our economy? They don't just store money, they make things happen. From funding businesses to supporting infrastructure and digital innovation. Banks power the nation's progress every single day. And here's another fun fact. The Bangko Sentral ng Pilipinas, or BSP, is working harder than ever to keep our system safe and stable. With laws like RA 11211, the BSP can now manage risk better, protect consumers, and make sure every peso is well guarded. Plus, the industry isn't stuck in the past. The rise of digital banking and fintech means it's easier and faster to send money, pay bills, or even start saving, all from your phone. Here's something impressive. By the end of 2018, the total assets of the Philippine banking system hit 17.1 peso trillion. That's proof that the system is growing strong and stable. Banks today are also smarter when it comes to handling risk. They follow strict capital and liquidity rules. So even when the economy gets shaky, your money stays safe. And also, did you know that bad loans, or what we call non-performing loans, are at record lows? That means banks are lending wisely and collecting efficiently. Even foreign banks believe in our potential. They continue to expand and invest here, proving that the Philippines is seen as a strong and trusted economy around the world. And the best part, banking services are reaching more Filipinos, from digital apps to rural branches. Financial access is now easier for everyone. So, the next time you deposit money, pay through your app, or apply for a loan, Remember this, you're part of something big. The Philippine banking industry isn't just about money. It's about growth, stability, and the future of our economy. So stay smart, stay informed, and keep supporting a stronger, digital, and inclusive Philippine banking system.